everyone. It is Evan here from the Trade Risk on Tuesday, November 20th, here with a midweek market recap video. We're going to cover all of the major markets and the current market environment. So before we jump into the charts, we're going to start off with a new dashboard I put together this weekend. This is hosted on the Trade Risk for you to go to if you want to see this. TradeRisk.com/market-technicals, entirely free and updated here, but it's a dashboard that I think will give us a good high-level view of the market for these recap videos as an intro, essentially just looking at performance and where markets stand across some of the key moving averages that most people pay attention to, followed by a little sector breakdown. So something I've put together this weekend. I thought it would be interesting. Let me know if you have any thoughts, feedback, things that you want to see in here. I don't want to overwhelm it with too much information, but I want to give us, basically a look and glance at a quick 60 seconds of what's been going on over the past, 5 or so days and then slightly longer term. So when we look here at this dashboard right now, it looks like Thanksgiving is on hold right now for the bulls as markets really getting slaughtered today, down basically 2% right across the board on all of the major averages. You can see looking at these columns here, we are below a 10 SMA, 50 SMA, 200 SMA right across the board in all of the major averages, and we are below last week's lows in all of the major averages. So really ugly out there in terms of recent price action. When we scroll down, really, it's utilities, which is barely trying to hold green over the past 5 days. It's still in negative territory, and then all the way down here, you have really risky assets. You get discretionary, technology, industrials, and even the staples now have fallen down on their 5-day performance. In terms of major markets, it's the VIX. That's not never what you want to see leading the charge here, but 5-day performance positive 13%, followed by natural gas down below, again, risk assets. So let's jump into the charts now with the S&P 500 weekly time frame. You can see we are down 3.4% so far this week. It is only Tuesday. Remember, it is a holiday shortened week, so we have markets closed Thursday, half day on Friday. So we really only have a day and a half left of this week's trading. And when we look here at the price structure of the weekly time frame, you can see we are below last week's lows, and we are very quickly approaching back to the November lows down around, all the way down around 2603 was the ultimate low. We're still 40 points above that, but you can see we are basically down to this general vicinity, the lows from 1026 and then the lows from 11.2 in this general area here. So, kind of coupled with that is we have the MACD continuing to make new weekly momentum lows here with the 8 and 20 settings, slightly modified MACD than the standard default settings. But we have a momentum making new lows here, and we are below the trend line that we broke down from back here in early October that stretches from the 2016 lows. My big picture view, again, looking at this market in a bigger range here, 2533 to call it 2872, 2533, those were the lows made in February. So not saying we have to go there, but that is the playground that I'm sort of looking at for the big picture here for the market. If we were to go revisit those lows from where we are right now, it is actually only about 4% from where we're currently trading. So that is the big picture. Let's go down to the daily chart. We'll get a little more refined view here. So the S&P 500 will switch over to a more busy view with some more horizontal levels drawn in here, but I think they're relevant. We started off the week on a down foot on Monday. We sold off immediately. Now, we talked about on the weekend video how we had a little bit of encouraging action here into the close of the week. We had this rebound, this reversal day on Thursday, and we had some mild follow through on Friday. In fact, we got long here, the S&P 500 on Friday's bar, on the fact that we were able to slightly continue those gains and, more importantly, hold on to Thursday's rally. Well, clearly we got slapped in the face coming into this week. We sold half of that trade, half of that long SPY position on Monday, and we sold the other half here on the opening today. So we booked a loss. We no longer have the S&P 500 long that we put on and talked about in last Friday's video. And importantly now, the fact that we gave back Thursday's reversal lows here, I think that was a good line in the sand to have for the short-term, more active type of trader. The fact that we broke below it Monday, or started to break below it on Monday, started to pull back on Monday, and then got that follow-through confirmation here on Tuesday. That to me is pretty ugly developments there in the short term. Could today be the bottom? Absolutely. So you know, we could continue higher from here, and we just capitulated lots of people here today, myself included. But you know, we still need to respect the price action from the loss of these levels today. If we started to reclaim 2,700, and really I would be looking more here around this 2739, 2740 really. If we dial back a little bit too, I think we see this level, look at this 2740 level come in here as a bit of an inflection point. So really you kind of have another little line in the sand to use on the upside here, which was Friday's highs, or basically Friday's close, 2740. But first would be getting above 2700, and so far we're not even heading higher. So on the upside, it looks like it's pretty mute to talk about that. If we look on the downside, however, we do have the lows here back from the 29th of October, which we mentioned at the top of the video, which come in around 2603. And then if we zoom back even further, we do have a lot of price structure back around this 2600 level, 2590. Take a look back here in April of this year. Market spent a lot of time, you know, kind of selling off and finding buyers around this 2590 area. Again, we're not there yet. We are approximately 2% away. So if we saw another selling day like we did today, tomorrow, or later this week on Friday, then we would be back to this 2590 area, 2600 area, and that is definitely a spot where we'd want to see the market try and find its footing again, like it did back in April or May, and then of course the ultimate lows all the way down at 2532. That was this wick from February the 9th. So as it stands, markets selling off, not looking too hot, but we are coming back into these lows made a couple weeks ago. And the one thing I will still point out here is the MACD is still got some of that positive divergence going on here. So as you can see, we're getting back to these lows here, but the MACD is nowhere near the lows it was about 3 or 4 weeks ago. So it's just really a mixed market right now. It's a market where you need to protect yourself. It's volatile. The VIX is certainly back up again. I think at the close today, north of 20, about 22.5. So we do have, again, elevated ranges, overnight risk. So we need to be careful of that, be cognizant of that, and you know, picking direction in the near term where price is right now is just a difficult game. I wouldn't be surprised to see 2,600 at the close of this week. I also wouldn't be surprised to see us back around 2,700. This is a wide range that the market is sure to spin some traders up here, so be cautious. As it stands above we're now below some of these key levels. Back above 2,700 gets me a little more neutral, and then back above 2740 would maybe put on some type of rally there in my head. So that is the S&P 500. If we go to the IWM, you can see we are much closer, in fact almost retesting the lows here made just a few weeks ago at the end of October. That came in right around 144 and change. We're trading at 146, so we do seem to be very much in line retesting that. And again, MACD up here on the top on the daily chart, we do have that positive divergence. Does not mean we have to hold. It doesn't mean just to buy blindly, but it does suggest that we should just be on alert to see how price reacts around these lows. You know, always keeping in mind that the markets like to fool the majority. Maybe we do a quick run below here, get everybody really bearish, get the sentiment super negative, and then we, you know, pop back into the last couple weeks of the year. It's just a scenario. It's not a problem. You know, I'm not saying that that has to happen. Just to keep an open mind and think about all of the different cases that could unfold here. NASDAQ 100 finally here did break down and took out the lows from the few weeks ago back on the 29th. We are trading and closing below that level. Good volume today came in. We did manage to, you know, close above where we opened today. So, you know, I guess a mild sign of very micro sign of some stabilization there, but still things are pretty broken here as well in the short term. You have to be cautious. MACD doesn't have as quite of a good bullish divergence as some of the other major averages, but a slight piece there, as you know, certainly we did break to new lows, and you can see again the MACD is not at new lows, so something to think about, but again does not mean it is safe to jump back into the pool. So that is really the market environment overall. It's back to to, you know, risk off, so to speak, if you like that term. If you don't like that term, throw it away. But it is a time to, you know, again, monitor your outstanding risk and, you know, pay attention to what you have open heading into the next couple of weeks. So let's look now at some of the other major markets. We've got TLT, which is still continuing to grind higher here now. It is back up towards the top end of this recent trading range. It looks like it wants to try and break through. Momentum just moved, MACD rather, just moved back into positive territory. So a little bit of safe haven flight here into TLT, which still looks horrible on a longer term time frame, but in the face of equity markets that are waterfalling lower, TLT seems to be at least the best house in town right now. So encouraging action to see. Short-term trend remains higher. You can play that and trail that stop accordingly if you're involved in it. But remember, longer-term outlook is still dicey. I really want to see this over 117, and then things start to turn to a more neutral, longer-term picture there for at least the way I view markets there in TLT. USO, stabilized for a few days here, had some mildly constructive days where we had some inside sessions. Talked about this being, maybe this was capitulation here, but proved not to be at all, just proved to be some type of continuation pattern, a little flag, if you will, and this came roaring back down to new lows. Heavy volume coming in again today, 7% down. Ranges are accelerated. Average true range here in USO has exploded over the past few weeks, past couple of months, frankly. So this one is still in free fall. We had some signs here. Now we're back to new lows. For me, it's really, if you're playing the knife catch game, that is really all it is at this point. I would want to see this at minimum recapture the lows here from the 13th. If we start to reverse sharply tomorrow or later this week, the next couple of days, and we sail up above this 1170, maybe we can get that dead cat bounce a little more strong than just the 3-day lifeless inside sessions we had. But until then, you got to be real cautious there in oil. Natural gas, on the other hand, this one, again, still remains flipped. Trend here remains strong. We did have good size intraday range today as well, which was reversed, and we did close near the session highs. It is incredible to see the average true range here as well just has skyrocketed over the past couple of weeks. Really historic moves here. I think we're up 8x, 800% in the ATR over the past several weeks or so. So you do have to be careful there, especially if you're on the wrong side of this trade. We do still have our long UNG position on, initiated back here in the 26s. We scaled 75% into this move to the upside. We still have 25% on. We're trailing up our stop, which I believe I have to look at my risk manager after the record of this video. I think it's around $33 or so is where our current trailing stop is going to be, but we're still looking to ride this trend. Momentum making new highs today. It's stretched, it's overbought, it's nosebleed, but it is really tough to fight this, so be careful there for natural gas. Finally, if we look at metals, GLD, you can see here, not doing a whole lot. It had reclaimed that 115 area. That was constructive. That was positive to see. I'd like to see it just continue to stay above 115, but for all the action and all the movement that you see out there across major assets and markets and equities and world assets, really don't have gold doing a whole lot right now. It is really just kind of chugging along comfortably sideways in a lot of this range that it's been in for the past couple of weeks, past couple of months. Silver, kind of the same thing. We almost made, or we did make new closing year-to-date lows just last week, but nothing materialized out of them. We popped back the very next day, and now we're just back comfortably in this sideways channel that we've been in since mid-August. So metals really not doing a whole lot right now to speak of. Still something to just wait patiently on for more meaningful moves. So that is it. That is what I have for the midweek video. Hopefully you guys managed some of this volatility today. Didn't get too blindsided by it, or at least If you did, you took your stops where you needed to, you got out of it, and you're not fighting or digging your heels into a market that is looking pretty dangerous here. And also, again, if you have any comments on this, feel free to let me know. I will be probably iterating on this over the next couple of videos. You'll probably see some things change. I just did a kind of a first pass here of what I thought was interesting and important based on how I view markets and for sort of the scope of this video. But welcome any feedback, and you can get to this. Market Technicals is the URL. So have a good Thanksgiving. Enjoy some time off, and hopefully de-stress from some of this market. And we will be back on Friday with a weekend recap. Thanks so much.